Hey students and friends and boys and girls from around the world, hope you're doing absolutely phenomenal. You are likely here for the fourth video if you did get a chance to watch this from the website. Yes, you might be watching it from YouTube or Twitter or Facebook, one of my blogs, but if you are on our website, www.reallifetrading.com, and you have the opportunity of clicking this little icon right there, this class, ladies and gentlemen, is entitled Trapping. And what it's all about is gap trading and gap analysis. Now, this class really won't take that long to explain. Now, the phenomenal thing about this class is not only does it relate to swing trading, it also relates very well to day trading and also sometimes core trading. And every now and then lifetime trading, right? Life trading, where you're doing really long trades. So let's just kind of get down to the bare bones of what gapping is. Bottom line, ladies and gentlemen, a gap occurs from a large influx of overnight orders. This can happen from some type of news release. Usually it's earnings. When a company every 4 months reports earnings, the stock often will gap in price because it's revalued and creates a new value in the price in which the market determines. And at that point, the stock, when it opens, will be either much higher or much lower. But that's really not the important part. Okay, the important part not necessarily is why does it gap. The important part is who is losing money when a stock gaps and who is making money and how can we follow along and get a piece of the pie. So the very interesting thing as it relates to gaps, and again, this is super simple and quite revolutionary, is it's all about the prior candles and the pivots. Prior candles and pivots. So as you guys know, what a pivot is, it's simply a point of support or resistance. So this is a pivot right there. So that's a resistance. This is a pivot right here, which is a support. This is a support. This is a support. This is a resistance. This is a resistance. This is a resistance. It's just where the stock stops moving. It's a pivot. And those two aspects are pretty key because, as most of you know, black candles are created from selling pressure. Now, there's two types of sellers out there. There are those who sell their long positions, and there are those who sell to get into new bearish ones. In this particular situation, it doesn't really matter who is who, but you can take into consideration that these candles most likely are due in part to short selling, right? Or the stock being sold bearishly. So as the stock goes lower and lower and lower, there are more and more people who begin to jump on this bearish bandwagon, if you will. So the candles really start picking up and the volume really starts picking up and the bears get very excited. Well, then what happens the next day? The stock gaps up. Now, why is this important? Well, think about it, ladies and gentlemen. At the open of the day, which was right about right there, who is losing money on this trade? And the answer is anyone who went short in this red line. Anyone who shorted the stock, which is obviously probably a lot of people or banks or companies or mutual funds or, well, not mutual funds. They can't really do that. But institutions or institutional traders or hedge funds or whatever, they went short the stock. The stock was going down. They were happy. They were making a profit. Then the stock gapped up literally overnight, causing them to panic. Why did it cause them to panic? Well, because they're losing money instantaneously, especially the guy who went short right about there. Now, keep in mind, though, that this particular candle does have a lower shadow, so that there is going to be some selling the next day, usually. So this lower shadow, as you guys know, represents buying pressure. So when the stock gaps up, when there is a lower shadow the prior day, it's often prudent to wait for a retest. Now, this can be from either day trading or swing trading. The interesting part of this particular gap, though, is that there are so many bearish traders trapped. So all of these black candles, they're trapped. So one of the most important things to look at, ladies and gentlemen, is simply the last candle before the gap. Ask yourself, is it black or is it white? If it's black and we gapped up, there are a lot of people trapped. If it's white and we gapped up, that's also okay, but you need to understand that we're likely going to have a retest of some kind either that day or in the future because the people from the white candle are going to be selling. So as an example, this is a perfect example just a few days earlier. White candle, white candle. Had you waited for a retest, you could have gotten in this day, or you could have waited all the way for a confirmed bounce. So you didn't get in at all, and then you really got in strongly on that gap up right there. Here's another example. White candle, gaps up into a white candle. So the first white candle, ladies and gentlemen, is created from buyers. That's why the candle's white. There's buying pressure. So what do buyers want to do when a stock gaps up unexpectedly? Well, they want to sell. They want to start locking in their profit. So again, it's often very prudent and wise of you as a trader to wait for some type of retest, either if it's a day trade or a swing trade or a core trade. Now, I'll be giving you guys specifics on our day trading section in regards to exactly how to play this as a day trade. But what is absolutely important to know and understand is it is always important to be patient when a trade is doing something. So same situation. White candle, gaps up into a white candle. Could you have had the opportunity for a retest? And the answer is yes. What about this gap from here to here? Did you have the opportunity for a retest? Well, kind of. I mean, you might have gotten the opportunity to buy in somewhere right around here. It did rest at some point. This is true. It didn't leave you behind the dust, which is a good thing. But you would have had to wait, 2 or 3 weeks or so. So it is quite interesting to understand that if you get a white candle and we gap up, it's pretty important to just say, hey, I'm going to be patient. I'm going to wait for this trade to come to me. If we have a bunch of black candles and the stock gaps up, those bearish traders are trapped. They are trapped, and there's not much they can do. So that's quite fascinating because what can they do? Well, if you are a bearish trader and you want to exit a trade, how do you exit? Well, the answer is you have to buy to close. That's absolutely correct. You have to buy to close. So this buying to close is literally what creates the stock to continue higher, all of that buying pressure. You'll often hear this every now and then as something called a short squeeze. And a short squeeze is something where there's a lot of short interest out there in a particular stock. A lot of people have been shorting the stock, and then the stock begins to continue higher, and short traders are forced to buy to close, creating a really strong move. So there's some examples just on Google alone. Let's go look at a few more. Now, this is a really good example. Let's ask this question, ladies and gentlemen, yes or no. Would you have had the understanding to wait for some type of retest from that gap to that gap? Yes or no? And the answer is yes, absolutely, right? It was a white candle, gapped up into another white candle. You would have had the understanding of, hey, I probably should be patient and wait for some type of retest. And not only that, ladies and gentlemen, but has the trend already moved quite nicely? I mean, at that point, it's moved almost 100 points. Okay, I'm no mathematician, but that's almost like, what was that? 100 on a $300 stock? Over almost 45% or something. So yeah, very strong move. Okay, so you probably would have waited a little bit longer on that candle. But here's what's beautiful. Okay, the trade comes down. We get into a nice little double bottom pattern. Okay, obviously, boom. There's the entry. There's the stop, and then the trade continues. So this gap right here. Also, would you have had the understanding to say, hey, I should wait for a retest? And the answer is yeah. Now, when did it retest? Well, it didn't really, which is fine. Some stocks won't retest, but it's really good to know that this gap right here, there's a lot of buyers who have made a profit already. So there's going to be a selling. So even if you waited and you got in intraday while the market was open, simply knowing when it gaps up with a prior day white candle to wait for the retest is huge. It's a very big win. Now, let's talk about this. So ladies and gentlemen, what phase of the market would this be right here? Most of you are saying distribution, and that is correct. It is a distribution phase. Okay, so we have a distribution phase. And what color is this candle right there? Now, I know all you guys can get this one. This is a black candle. So that candle was created from people selling the stock short. All right, well, let's look at the gap. Okay, stock really, really gaps up strongly. So here's your distribution phase right there. Anyone who shorted here, anyone who shorted here, and anyone who shorted here, and specifically anyone who shorted right there, ladies and gentlemen, what are they? They are trapped. This is me trying to write it on my mouse pad. I still don't have my mouse. This is it's pretty terrible. I know, I'm sorry. They're trapped, right? They're losing money. They're forced to buy to close. So this is one of my most memorable calls, probably of my career at this moment. It's a very, very good one. That along with X, United States Steel. We'll be looking at that one in a second. This one was such a strong gap because anyone who sold short there, anyone who sold short there, anyone who sold short there was losing money, especially this guy who sold short. Where do you think their stop was? At the highest. I mean, at the highest, their stop was this red line. So obviously we gapped above that line. They had no other recourse but to buy to close, and that caused the stock to continue. Knowing that information alone, you would have had the ability to say, all right, in this situation, I am more bullish than bearish. Okay, more bullish than bearish. So you could have bought that day, right? The open of the market, you could have been bullish, started buying. You could have waited a few days to buy, or you waited for the pullback, the retest, and the bounce. There's a new white soldier, by the way, right there. There's another new white soldier right there. Speaking of, here's a beautiful flag pattern. I had a hard time finding a good flag pattern from class 3, which is our, in section 2, our most recent class. So there's a beautiful flag pattern right there. And you guys can see the trade continues very nicely. So this gap right here, ladies and gentlemen, is that a retest gap? Yes or no? And the answer is yes. Did it retest? Quite beautifully, actually. Here's a new white soldier, gap up, another retest gap, and so on and so forth, okay? Google continues, yada, 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 and to present day. Now, let's talk about bearish gaps. What if we have a black candle and it gaps down, ladies and gentlemen? Is that a retest gap? Yes or no? And the answer is yes, it is. When you get a black candle and we gap down, we have to assume that those traders who went short on the prior day, that's how that black candle was created, okay? They are going to be making a profit. So how do they exit their position if they're making a profit? They buy to close. Buying to close creates the stock to go a little bit higher. Therefore, if you wait for a retest, you're more often to get in a better risk to reward ratio. So I'm not saying that's what's going to happen on Google, but I'm saying there's a good chance that if it happens, that's something to keep in mind. So this gap on Facebook, let's talk about two of them. This gap right here, from here to here, is that a retest gap, yes or no? The answer is yes. How do we know that? Because the prior candle was white and it's already been in a good bullish run. So all of these buyers, gaps up, they're going to sell, take their profit, boom, 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 retest, money. What about this gap over here? Was this a retest gap, or was this what I like to refer to as a gap and go? Well, it did gap up into a black candle, but it was still a gap and go trade, right? The pivot, here's the pivot, got cleared. So anyone who went short right here, anyone who went short right here, where would they have their stop placed at the absolute highest? Probably right about there. Probably right about there. So when the stock gapped above that pivot and it trapped all those short sellers, it was a very, very bullish gap. Now, we did get a black candle, but the very, very next day, ladies and gentlemen, we've got a nice white bullish engulfing candle. Having that sentiment and knowing the sentiment of this candle and seeing, oh my gosh, this is a shaved bottom candle. Oh my gosh, this is a very, very bullish gap. Could you have had the insight to go bullish right there and maybe just simply place your stop right there in the gap? Would that have made sense, ladies and gentlemen? Yeah, absolutely. I mean, that really, really could have worked out quite nicely. So, and that would have been like a 3, 4, 5R trade, on Facebook alone. Let's look at another. We can look at this gap right here on Facebook. So notice this was a really, really strong gap, and yes, it did clear a bunch of pivots. Ladies and gentlemen, would this have been a retest gap? Yes or no? And the answer is yeah, because the prior candle was white. Prior candle was white, it gaps up. When did we get a retest? Well, theoretically, this was a retest, so you could have bought in on that day. Or you waited for all of this, stock comes down, you get a morning star reversal pattern, and you go bullish right there, and you place your stop right there. Ladies and gentlemen, that, depending on how you got into that trade, could have been like a 10R trade. 10R. I mean, when you're day trading, 1 hour a day is your goal. When you're swing trading, 10R, 11R a month, very, very solid goal, honestly. And that would have been an incredible risk-reward ratio, and it really was. I mean, that was a phenomenal trade. Very, very pretty. All based on the gap analysis and the sentiment. Let's hop over to X. This is X-ray steel. Now, there's 2 gaps in here that we're going to be talking about, which are quite fascinating. We have this gap, which I wrote up on one of my blogs, which was, again, a very, very profitable call for a lot of traders and a lot of students. What type of gap was this? Was it a gap and go or a retest gap? The answer is it was a gap and go. All right, so why? Why was it gap and go? Well, prior candle was black, so there were some trapped traders. You had, obviously, a giant distribution phase, and we were making lower highs, right? The stock was making lower highs, and the bearish traders could have sworn that this was going to continue to happen, right? We're going to keep making lower highs and lower lows, but we didn't. So there's a lot of bearish traders trapped here. There's a lot of bearish traders trapped here, and these bearish traders were also trapped. If you drew a resistance, you could see that we cleared that pivot very, very nicely. So what was stopping this trade, ladies and gentlemen? What was helping the bearish traders? And the answer is really nothing. Really nothing at all. There was nothing holding the stock back. It gapped and it was gone. And again, that could have really, really helped you as far as your analysis to understand, based on that gap alone, I want to be bullish rather than bearish. Again, coming back to our friends, the candlestick pattern, there's a rising 3, and you enter with a break above the high, and you place your stop below the low. So that would have been a good trade. Here was another rest after battle pattern right here. There's rest after battle. But this gap actually, ladies and gentlemen, would have kept you out of a bullish trade. Let's talk about why. Well, look at what X did. I mean, it went bananas, right? It went from realistically, it went from $26 to August to $44, which is almost a 100% return or 100% move in the stock in a month, which for a blue chip, well-known stock like X United States Steel is almost unheard of. So what I'm looking at in this trade is you had a nice, very, very pretty white candle. And that white candle, next day, there was a gap up. So automatically, is this a retest gap or is this a gap and go? And the answer is a retest gap. Exactly. It's a retest gap. Now, here's the interesting thing. Again, keep in mind the strong bullish nature of the previous trend, right? We've already had a really, really strong gap. We've already been moving ginormously bullish. And we get what type of candle? Do you guys remember what type of candle this is? High wave spinning top candle. Very, very indecisive candle. So for 3 days, this appeared that it could have been a stair-step pattern, in which case the trade just could have continued higher. But what was one of our warning signals? We got this candle right here, which was a new black crow. It's a black candle that opens and closes below the prior day white candle's close. So it was indeed a retest. I'm sorry, not a retest, just a new black crow. So one of their entries was right there for X, and a stop was right there. This was really a bracket trade. Really just kind of set up like, I don't care what happened, entry. If it goes down, awesome. If it goes up, awesome. And it went down. So very, very phenomenal trade on X, United States Steel. Let's do 1 or 2 more. Here's a bearish gap. And again, this is going to be a very, very interesting one to look at. So here is Lulu. And let's look at this one. And this one sometimes is easier to relate to traders because they trade bullish more. But let's say that you were bullish right here. How would you feel on that day right there? Stock opened at $82 the previous day and then opened at $70 the next day. Well, you'd probably be scared. You'd probably be upset. You would definitely be losing money. I actually made a lot of money on that day because I day trade that little sucker. But again, notice what would have happened, right? If you bought in here, or you bought in here, or you bought in here, you bought anywhere above the open. What were you automatically doing? As soon as it opened, you were losing money. So how would you exit your position if you were in shares? You would sell. Well, that selling creates selling pressure, and that selling pressure creates the stock to go lower. So the buyers were literally trapped. They were trapped in here. So as the stock gapped down, the buyers were trapped. They were automatically losing money, and they had nowhere else to go and nothing else to do. The bullish traders had to sell to close to exit their position. Okay. Now, what about this gap from here to here? What type of gap was that? Well, that, my friends, was the retest gap. Now, if you were day trading this, you'd have had a really good opportunity to wait for the retest. We can tell that based on that upper wick right there. We'll talk more about that in the day trading section, but it would have been a nice retest gap, and we can kind of see how it did continue lower, then retrace a little bit, and then move a little bit lower. So the retest did happen, but what about this gap? What's so significant about this gap from the green, from there to there? What's so significant? Well, what's significant is the prior day. This day, ladies and gentlemen, is a one white soldier candle. So do you think there were a lot of people who said, oh my gosh, it's a one white soldier candle? Yeah, they did. And what did they do? Well, they bought there. And where do you think they placed their stop? They probably placed their stop right about there. So what happened? Well, when the stock gapped down, they got trapped. They were forced to sell to close. Same type of gap that this was, just not as dramatic. This was a gap and go since it trapped bullish traders. And again, this was a retest gap right there. So it's really all about understanding the sentiment and understanding the why and asking yourself who is losing money and who's making money on this trade. And what's phenomenal to know and understand is this applies to so many different types of trading. It applies to day trading. It applies to swing trading, core trading, and it helps you pick the direction. You see so many people and so many traders out there are worried about the strategies, when in reality, the strategies honestly should be the least of your concern. It should be the direction of the market. What direction is this trade going and why? That is your most important question to answer, because ladies and gentlemen, once you understand the direction, you can apply any strategy you want, regardless if it's an option strategy, a stock strategy, a complex strategy, an advanced strategy, a simple strategy, doesn't matter. You can implement any strategy you want. But it's all about understanding the why and getting the direction of the market. Now, what's phenomenal is this exact strategy is what I do cover in my ebook that I wrote, my article that really is kind of sweeping the internet right now, Retire on 3K. And I mention a lot more about day trading in that particular article in regard to these types of gaps specifically. So if you want to read that and buff up on it, you're more than welcome to email me and message me. I'd be happy to send it to you for you to read it over. It does focus entirely on day trading. But there's a lot of money-making opportunities, ladies and gentlemen, when you're day trading, and you can find these gaps and simply understand the edge that you're looking for and trade whatever edge is there, and you're really looking at the candles, and it doesn't get much harder than that. So I really appreciate you attending this session, and if you guys have any questions anytime, feel free to reach out to me at jeremy@reallifetrading.com, or you can reach us at support@reallifetrading.com. You also can find me on Twitter @NewsomeNuggets, and you can find me on Facebook, on LinkedIn, and many other places, ladies and gentlemen. So I encourage you to join our Facebook page, post some charts, ask some questions, be amazing, and remember to spread the word about real life trading. It is because of people like yourself that the reason I am here to enrich the lives of those around me and entertain and educate. Thank you so much, ladies and gentlemen, for welcoming all of the students who are here tonight and bringing new friends and family members. Thank you from the bottom of my heart. Ladies and gentlemen, have a great night, great afternoon, wherever you may be from. I truly appreciate your time. Tell everyone about real life trading. Tell your friends, family, coworkers, and come back for our next live class, which might be something in section 3. We'll see, perhaps. And remember, love life, live life, trade it. Welcome to Real Life Trading.